While the economy in Sacramento has been pretty horrible, the apartment market here hasn't been doing so bad at all. But is the decent growth we've seen here going to be sustainable? Probably not. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Sacramento update. The big story in Sacramento has been the economy. Sacramento is obviously a state capital, and California has continued to have big problems with its state budget with no end in sight. Take a look at this chart showing annual employment change in Sacramento. We have had annual employment change in negative territory in 13 straight quarters, and the most recent data shows that Sacramento remains one of the very worst performing economies in the country. 14,600 jobs lost in the past year. Only the Riverside, San Bernardino area lost more jobs in the past 12 months. And let's take a look at how that's played out in the apartment market. And as you'll see, things aren't so bad. Overall occupancy here is at 94.5%, up a half point since 4Q and up 0.6 points annually. Occupancy here actually bottomed out in fall of 2009, but we have seen pretty steady improvement since then. And perhaps surprisingly, occupancy rates have been pretty consistent by product age group. And let's talk about pricing. Same-store rents climbed 1.9% in 1Q, pretty strong, and they improved 3.3% annually. That is right in line with the national norm. But take a look at this chart showing quarterly rent change by quarter, and you'll see that we've had quite a bit of seesaw action over the past few quarters. We go from pretty significant cuts to notable growth to more cuts, and then a big uptick again in 1Q 2011. And so you can see from this data that annual rent change in Sacramento is really driven by strong increases in 2Q of last year and 1Q of this year. But this data also shows there's a lot of uncertainty among property managers and owners in Sacramento, and that doesn't bode well for consistent improvement going forward. Interestingly, we did see annual rent growth in all 10 of Sacramento's submarkets. Let's take a look at the top performer. That's the upper end Orangevale, Fair Oaks, Folsom submarket. Annual rent growth there reached 4.7%, and that was achievable because occupancy here has been in pretty good shape, up 0.3 points year over year to 95.3%. And that's the best of the bunch, but as we noted earlier, the results all across Sacramento submarkets have been pretty good, with occupancy rates of 93% or better everywhere and annual rent growth of 2% or better in most spots. But the big question is, can revenue growth continue in Sacramento's apartment market? And the big problem is, as we mentioned earlier, with the problems in California's state budget unresolved, it's unlikely that the apartment market in Sacramento could dodge these problems much longer. This is one of the few markets nationally that is quite likely to see revenue growth actually drop off in the coming year. So that wraps us up for Sacramento. Until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.